Hello and welcome back to Lesson 7 of the Masuda Ashi introductory course. Today we'll be covering the third of our lessons on basic Masuda Ashi chart patterns, and in the previous two lessons we've been focusing on this diagram where we have been talking about downtrends and uptrends, which we can identify at a glance by looking mainly at the medium-term Masuda Ashi real body line. In the daily chart case, it's the 25-day line here, which is blue in a downtrend and pink in an uptrend. This is the medium-term Masuda Ashi real body line, or the 25-day line on the daily chart. And we've been looking at the relationship of this medium-term line, which gives us the instant identification of the trend, and the behavior in particular of the short-term line in relation to the medium-term line. In a downtrend, we've been talking about how the short-term line typically traverses below the medium-term line until such a point that it encounters the medium-term line in what we call a golden cross, which is a positive indication that the stock price energy could be turning up, i.e. that this is a good turning point. And when we are in an uptrend, when the medium-term Masuda Ashi real body line is pink, the short-term line tends to ride above that. And we also talked about in the previous lesson good entry points in the terms of a buy trade. We were looking for these dips in the uptrend. So overall we're in a pink uptrend phase, but the short-term line tends to fluctuate quite a lot, and there's considerable volatility in daily share prices. So even if we know that we're in an uptrend and we didn't necessarily buy at the bottom, because no one can predict when the bottom is actually going to be, then we would look for an opportunity to buy on a dip, for example, somewhere in this phase, or when we've seen that it's going to pull back a little bit here when the line turns blue, we would like to buy around this point. So the earlier the better. Of course, you want to buy at the lowest point possible, although not necessarily at the lowest point, because again we don't know when that will be exactly, and then ride it up until such time that you can confirm that it's a good time to take profits, sell shares and close your position. We'll be discussing this in more detail in this lesson about exit points, that is. And just to recap, on the short sell side in a downtrend, we know that we're in an overall downtrend, but the short-term Masuda Ashi line sometimes rallies a little bit in these kind of short-term reversals in a downtrend, and we want to buy at the top of these rallies, or at a point when we know that it's going to go down again, so that we can capture the highest price possible for selling short the stock. And then conversely to the buy situation, when we want to take profits, we want to buy back shares at the low point, or as low as possible, in order to capture our short selling profit before the share price turns up again. So we'll be looking more today about when to get out of our trades, or closing the trade, the exit points. Now there are basically two simple ways using this kind of diagram, or the rudimentary basics of the Masuda Ashi chart system, to know when to exit a trade. Now if we were lucky enough, after this golden cross we've confirmed there's a dip, if we buy at the bottom of this dip, for example, we'll use this example here, the best time to sell according to this simple rule would be at the first opportunity when the short-term wave turns blue in an uptrend. So at least we would capture on the vertical scale around this much profit. Alternatively, if we had bought at this dip, the time to sell would be when we ride it up while it's pink, and then sell when the short-term Masuda Ashi real body line turns blue. Now that's okay. I mean, we could capture at least this amount of profit, which is better than nothing, also better than making a loss. However, if you had been lucky enough to kind of get in early at this stage, or even here, and then you sold at this point, or you sold at this point, then over the longer term you see that the share price goes up a lot more, this is kind of a wasted opportunity cost, this area that you missed out on. So ideally we would like to get in on the trend early, not necessarily at the bottom because no one knows when that will be, but early enough to be able to capture enough of the rising trend to then sell at a higher point than we bought and capture those profits. That would be the simplest way. But then the next problem is so just to recap, that would be the simplest rule would be to buy on a dip and then sell at the first signal that the short-term wave has turned blue. But we would rather get a much larger profit based on normal investor motive, and hopefully, you know, capture more to be able to sell and take profits at a much higher point than these temporary dips would have indicated. So we could hopefully, if we got in early enough, capture most of this rising wave and then selling at the top to make a much larger profit. The problem, or the next question, is how do we know that we're approaching a top? How do we know that this would be a good point to take profits? It's fine in hindsight. When we look back in time, we can see exactly what the chart did, and we can say, oh, we should have done this and I should have done that. But what we want to know is, for example, if this is the current day, how do we know that this inflection point or this pullback from pink to blue is actually going to be a worthy sign telling us you should take profits? Now, let's investigate this concept a little bit more. Now, if we remember some of the basics of Masuda Ashi, the chart system, a medium-term pink line, the 25-day line here, indicates we're in an uptrend. So one point would be to hold on to the stock for the length of time that this medium-term line remains pink. And at the first sign that it's turning blue, well, not necessarily the first time, but if it turns blue and it looks like maintaining this blue phase, then this would indicate the start of a downtrend. So this would be a good time to take profits. So if we bought in early after confirming that we're in an uptrend, or bought on the dip partially on the way up, and then we confirm that the medium-term line has turned blue in a downtrend, this is a turning point, then this would be a good time to take profits, probably. Another point that we've been mentioning is that in an uptrend, the short-term line usually traverses above the medium-term line here. So another indication would be, as well as the medium-term line turning blue, as we just discussed, is when the short-term line comes below and stays below the medium-term line when it's blue, which would indicate a downtrend, as we have here on the left. And on this point, we talked about how the golden cross was a good opportunity to confirm a bottom or a turning point, and an upturn in the trend. A dead cross is also a good indicator that when the short-term line breaks below the medium-term line, that you should be on the lookout for a top occurring here. And if you have a long position, this would be a good time to take profits and exit the trade. And although the dead cross doesn't happen exactly at the peak, that's okay, because no one can predict exactly when the peak is going to happen anyway. But at least if you'd bought down here, not even at the bottom, but just partially on the way up, and if you sold at this level with the indication of the dead cross, or again another dead cross here, you'd still, where this word dip is, you'd kind of capture this at the top down here somewhere. That's still a decent profit, better than nothing, and definitely better than making a loss. So as long as you're not greedy and are trying to pick the tops and bottoms, which no one can do, if you just follow these rules based on the relationship between the short term and the medium term Masuda Ashi real body lines, then this alone, these simple rules, are enough to allow you to begin trading without having any kind of advanced detailed knowledge about candlesticks or any of the other technical analysis tools or fundamental analysis. Just following these patterns should increase your probability of generating profitable trades, as well as avoiding losses. That's another key thing, is to keep your money. Don't lose the capital. If you lose the capital, then that's a different problem altogether. Just on the point here, if we have a long position, we've bought on the dip as we discussed in the previous lesson. Now we're looking for the ideal exit point. We have a change from pink to blue here. Now we've had several of these on the way. This could just be another dip about to occur, but as we see, this dip actually goes much lower. Also note that this is a deeper dip here. It's had a dead cross, sorry, not a golden cross, a dead cross, and the second rebound with the pink phase is lower than the previous peak. So this is definitely a good time to take profit.